Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled soon, and that has an effect on the global markets. As oil prices are now hovering around $45 per barrel, the entire oil and gas industry is looking forward to the next OPEC meeting, due to be held on December 4th this year in Vienna. Venezuela has been the most vocal OPEC member when it comes to the issue of raising oil prices by altering the cartel's production levels. During the technical meeting between OPEC and non-OPEC members, Venezuela proposed that OPEC must resume its policy adopted in the 1980s of fixing the oil price. It suggested a possible ceiling price of $88 per barrel, which would naturally require OPEC to reduce its current production levels. In addition, Venezuela also proposed another technical meeting of this kind to be held during the upcoming December 4th meeting. Although Venezuela has received support from other OPEC members such as Ecuador and Algeria to some extent, the OPEC leaders dismissed any further speculation on production cuts. With this firm stand, it is possible that we might witness the formation of two blocs within OPEC during the next December 4th meeting in Vienna, one led by Venezuela, Ecuador, Libya and Algeria that would want to reduce production levels, and the other led by Saudi Arabia, UAE and Kuwait, which would stick to the current strategy of defending market share. Iran may have a neutral stance as, although it urged the other OPEC members to reduce their combined production to maintain a ceiling of $70 to $80 per barrel, Iran would itself be ramping up its production levels to regain its lost market share once the Western sanctions against it are lifted. Kuwait said there were no calls within OPEC to change the oil group's production policy, and that lower output from high-cost producers could support prices in 2016, adding to signs that OPEC would keep its strategy of defending market share. Meanwhile, OPEC forecast in a monthly report that demand for its oil in 2016 would be much higher than previously thought, as lower prices curb US shale oil and other rival supply sources, reducing a global surplus. OPEC last November decided against propping up prices by cutting output, seeking to recover market share taken by higher cost rival production. While oil is hurting OPEC revenues by trading below $53 a barrel, half its price of June 2014, there are signs lower prices are taming non-OPEC supply. OPEC expects the world will need 510,000 barrels per day more crude from its current 12 members next year than previously thought, as supplies fall from outside the group. Non-OPEC supply is expected to decline by 130,000 per day in 2016, the report said, as output falls in the United States, the former Soviet Union, Africa and Middle East and much of Europe. Last month, OPEC predicted it would grow.